China has just held its 14th National People's Congress, setting out plans for its economy.
China's having money problems too. Its provinces and local governments are out of cash. They need some debt relief and they need it fast.
What's going on with China's economy? China's economy started to slow down in the second quarter of 2023 after a strong rebound from the pandemic at the beginning of the year. Exports used to be a steady source of growth, but now they're having a hard time. At 14.5% in July 2023, it was the biggest drop in China's exports since COVID-19 broke out. Chinese exporters are losing money because of weaker demand around the world and rising geopolitical conflicts. Welcome to Live Economic News. Today, we delve into a pressing issue with far-reaching implications: how China's deflationary trend is reverberating across the global economy. Don't forget to like and subscribe. Also hit the notification bell icon. Due to ongoing problems in the real estate market, investments are being slowed down, and Chinese consumers are becoming less optimistic about their jobs, incomes, and economic chances. In June 2023, the youth jobless rate hit a record high of 20% of 16 to 24-year-olds living in cities. China was expected to grow faster in 2023 and 2024 than it did in 2022, when it grew by 3.0%. However, a growth rate of about 5% is a lot less than the economy's trend before the pandemic, which was 7.7% per year from 2010 to 2019. In June and July 2023, the People's Bank of China lowered interest rates to get the economy going again. If we want to see the economy grow even more, we will probably need more fiscal stimulus in the form of tax breaks or incentives for manufacturing. What's the big deal about deflation in China? China's consumer prices fell below the level of deflation in July 2023, a common sign of an economy getting worse. The real risk is that as people become more sure that prices will go down, businesses and customers will put off investing and spending even more. In turn, this will lower demand at home, which will slow down economic growth again. In China, deflation can worsen a country's debt because falling prices make bills worth more. Because of this, China's businesses and local governments will have to spend more money to pay off their debt, leaving less money for investment and spending. The Bank of International Settlements says China's total debt, including both public and private, is already high. It hit almost 3 times China's GDP in 2022, which is higher than the US's debt level. China's deflation is expected to only last for a short time, but there are strong deflationary pressures because of the base effects and the rise in core inflation. There will be a lot of work for the Chinese government to do to stop the downward circle of falling prices, weaker demand, lower output, and higher unemployment. How is the manufacturing business in China doing? Even though there have been problems, China's industrial sector has been able to keep growing so far. But growth has stopped. Industrial production grew by 3.7% year-over-year in July 2023, which was less than the 4.4% growth seen in June. Also, investments in fixed assets grew by 3.4% in the first half of 2023, down from 3.8% at the same time last year. China's factories are having a hard time because exports aren't selling as well, and the building industry at home is having problems. Manufacturers' prices are going down because they have too much inventory and too much capacity, which cuts into their earning margins. Finally, problems in geopolitics are making things even harder. According to national figures, FDI in China was $4.9 billion in Q2 2023, the lowest level since 1998. This is because political unrest and changes in rules make foreign companies less likely to invest in China. Chinese businesses are expecting slower growth in demand and production in the future. The official Purchasing Managers Index, PMI, for manufacturing has been below the 50-point mark since April 2023, which means that factory operations have been slowing down. Business people's trust is also still going down. Manufacturing and the B2B sector as a whole are expected to have a slow year in 2023 because of weak internal demand and exports. If there are problems in China's real estate market, could it cause a banking crisis? The building and real estate industries are very important to China's business. The construction and real estate sectors comprised 13% of all output in 2022 and employed 11% of workers directly. So the crash in the real estate market will hurt economic growth a lot and could lead to bigger problems in the banking sector as well. Developers are having trouble getting cash because of the unstable home market, which could also affect other financial markets. Country Garden Holdings, one of the biggest Chinese companies still in business, missed interest payments on $2 bonds in August 2023, which made the financial markets even worse. Chinese banks gave problematic developers $430 billion in credit lines as early as 2022, but ongoing problems in the real estate market may need more money. To keep the problems from spreading to other financial markets and economy, banks and the government need to develop short-term plans to help real estate companies restructure their debt. What if the economic slump gets worse in China? China's slowdown scenario shows what would happen if China's short and long-term growth prospects got worse, as well as how that would affect China and the world economy as a whole. As China's property market falls even more and asset prices fall, defaults could happen. This would hurt people's trust in the financial system and lead to capital flight, currency devaluation, and higher unemployment. A faster population decrease and slower productivity growth would also hurt China's long-term growth potential. Based on this situation, China's real GDP growth could drop by 0.3% to 1.2% in the first and second years compared to the base case. A greater slowdown in China, with less investment and less spending by consumers, would hurt economies around the world through trade and commodity links. Because of this, a forecast says that the world economy could grow 0.1% to 0.5% less than expected in 2023 and 2024 compared to the base case. A slowdown in China will have a bigger impact on developing economies, especially those that trade a lot with China. Could China's economy lose 10 years? There are growing worries that China could have a lost decade of stagnation, like Japan did in the 1990s when the real estate bubble burst. This is because of problems in the real estate market, instability in the financial markets, slowing domestic spending, and the risk of deflation. People are worried that the real estate market will go downhill for a long time because there are too many homes for sale and not enough people want to buy them. Problems with structural demand, like a population that is shrinking and getting older, are also making things harder. In China, for example, the total number of people will drop by 1% over the next 10 years, but the number of people aged 65 and up will rise by 44%. Long-term demand for housing and real estate will stay low because of this, and the real estate market will go through a long period of decline. How will China's slowdown and risk of decline affect businesses and economies? The world economy will grow more slowly as a whole if China's economy slows down, but it will have different effects on different businesses and countries. On the other hand, exporters to China and stores in the country will be hurt by slower growth in business-to-business and private spending. China is a big market for tools, high-tech goods, and high-end goods. Slower growth in China will also hurt countries that sell goods, especially those in Latin America and Australia. However, China's slower economic growth could be good for Europe since it will make the energy and natural gas markets less competitive. European countries are especially sensitive to sudden changes in the price of natural gas. Lower prices can help ease the pressure on energy prices. Some people also worry that the dropping prices of Chinese goods will make the market more competitive, which will hurt foreign businesses. But this probably won't make a big difference in the way global competition works in the next few years because it would take a long time for the effects of deflation and currency devaluation to be felt. What are your thoughts on China's economic slowdown? Do you think it will have a ripple effect on the global economy? Let us know in the comments below. Don't forget to like this video if you found it informative and subscribe to our channel for more insightful content on economics and global trends. Thank you for watching.